Hey, Job here. On this channel, I invest 100% of my income and live out of my Robinhood brokerage account. All that in service of the aggressive goal of retiring by 40 years old. I'm 36 years old now, so that's 4 years away from now. Today, you get to see this in practice and see in what and how I invest my full $2,386 weekly paycheck and how I pay bills on margin. I don't pay my bills first, then invest the rest like most people do. By using margin to pay all my bills, that enables me to invest 100% of my income and never interrupt the money compounding in my brokerage, both on the growth side and the high yield income side. Step by step, you'll see how I invest to build monthly cash flow that'll eventually exceed my monthly expenses and replace my full salary. That said, as always, you'll get radical transparency on my channel. I share my real numbers, and you see exactly how much skin I have in the game with any given position. Nothing hidden. You can follow along my portfolio by checking the free Snowball portfolio link in the description below. If you appreciate all the transparency, make sure you give a like and subscribe. As usual, just a quick disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor and nothing here should be taken as financial investment or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Make sure you have a good read of this disclaimer. As far as the weekly flow chart, I won't go over it just because we'll be going over basically this in practice, right? And as you step through the video, we'll see exactly all these steps live. So if you want a good deep dive of this, check out the video at the top right. But otherwise, let's get started. So if we pop over to Robinhood, so definitely a green day today. I was secretly hoping that it would be a red day today for my paycheck investing. I ended up getting my paycheck earlier yesterday. Seems to just come a lot earlier now with Robinhood Banking, which is nice. So I know maybe next time if it is a red day on the day that I get it, I just kind of switch things around and film earlier than I normally do. Normally I try to do Thursday mornings, but up nice today. But let's just see what we can kind of find as kind of little deals to buy this week. So first things first, let's just transfer the money. So I'll just do this off screen here. So I'll transfer it from Robinhood Banking, just doing it on the mobile app because there's no desktop app yet, unfortunately. So I'll transfer over the $2,386.02. We're investing every penny of this. Should see this update in a second here. Great, there you go, it's updated. See the buying power went up as well too. So what happens here is that the buying power goes up by double the amount of that 2,386, right? The margin total goes up by that same amount, and then the margin gets paid down automatically by that amount. But then what happens is that I'll invest the full thing, so the margin will kind of go back up to what its previous level was. And actually, one thing that I want to make note of before we go is just the current income, just so we can actually minus out what we end up getting at the end, just so we get a good idea of how much income we created today through the investing. So let's just save that. And let's pop over to Snowball to see what dips we have today. So I love using the find a dip tool here. And FYI, there's a referral link for Snowball. You get a bit of a discount and I get a little bit of referral earnings from it. But yeah, love using it. Obviously, using it every week as you see on screen. So let's see. So as far as dips, we're going to do 10% into growth first, right? So as far as dips on the growth side, there's obviously DRAM over here that went down, but it's kind of back in the green here. There's pretty much SPMO down a little bit. It kind of shot back up today. So it's kind of down between SPMO and DRAM, I'd say. I think, honestly, I'm going to do SPMO today, just because I've been kind of focusing on IALT and DRAM recently and haven't done as much in kind of like the more index stuff that I have, like from VGT to SPMO here. So yeah, let's just do a little bit of SPMO. It's been a minute since we've invested in that, so we'll do that. So just a very tiny dip to buy on it, nothing too crazy, but yeah, kind of the spirit of DCAing, right? You're going to do it whether it's green or red, and in this case, it's definitely one of those cases, mostly green. So yeah, it's up nicely today. On the week, yeah, it was down earlier in the week, but missed that dip, right? Had I bought it yesterday, it would have been ideal. But yes, definitely still up big year to date. So let's just do that, $238 into SPMO. So buy that, and then we'll open another calculator as well here too, just to keep track of what we'll be investing. So 2386.02 minus 238. So we have this left, and I'll probably divide this into two buys here. So we'll have 1074.01 cents for the high yield side. So if we pop back over to the find a dip tool, so a couple of dips on the high yield side. So Goop, Chippy are come up here, not by that much really. XPAY comes up here, blocks, GIAX. See on the 50-day, blocks a lot, right? KGLD, Max, GIAX, XPAY. Honestly, so BTCI, as I mentioned, I'm kind of favoring blocks over that recently, so I'm not doing that. Blocks, I've just been going pretty heavy in it in the last few weeks, so I kind of don't want to do that. Similar for KGLD, Goop, that I'm kind of just keeping for YouTube earnings and kind of DCAing that way. Ulti, as I mentioned, I'm not doing that currently, and YMAX as well. KCOP, same thing as KGLD. So that leaves us with GIAX, which I like, and it's nice and diversified while kind of still paying weekly, a 24% yield. So that's down 3.2% in the last 50 days, and then XPAY down 1.8% in the last 50 days as well. So it's been a minute since I've invested in XPAY. Thinking that might be two good options here. The one on kind of like the higher yield side on GIAX, and then one on kind of the safer yield side in XPAY. So if we kind of look at those two, right? So for XPAY, yeah, I haven't bought since like the very dip here at the bottom of the market on March 30th. That was a lucky buy here. So, but this is pretty close to like some other buys that I've made in the past here. And then, yeah, so I generally just try to buy on kind of XPay's dips here because they've done pretty well on it, both on the capital gain side and the dividend side. So I think it might be a good time to buy there. And then GIX still kind of like in this dip channel here. So happy to buy that. But you can kind of see how it's recovered well from the Iran dip, right? Surprisingly, even with its 24% yield. So it's credit put spreads working really well since they shifted to that at the beginning of the year, which is nice. I think it's nice and diversified because you have like you have VU, you have your small cap, mid caps, international exposure, and then they kind of get their credit put spreads through single stock names. So it's a nice diversified mix there. So let's just do that. Let's do half in GIX and then half in XPay. All right, so 10401, right? Okay. 107401, every penny, every last cent. We waste nothing here. So buy that. Great. And then XPay as well, 1074.01. So yeah, we can kind of see here it's been down to the last week. So buying a little bit of a dip there, which is nice. And then buy that. Great. So that's the full paycheck invested. So we'll see here that like the net value won't have gone down just because the money stays in the portfolio. But what goes down is the buying power by exactly that paycheck amount, right? So it kind of switches between here. So you can see that the margin used kind of went back up to what I had before the paycheck came in. But the margin total stays the same because the dollar amount stays in the portfolio through the investment. And then also the cash flow for withdrawal, half that amount stays from the 2,386, right? And then now we'll just pay some bills. So basically going to take a margin loan against our growing assets, right? And then pay the bills. So we don't have to sell anything. We don't have to do anything like that. We're basically just taking a loan against our growing assets. And ideally we just never sell our assets, just kind of keep floating our lifestyle that way. So if we pop over to the sheet here, so there's only two small bills today. So if we pop over here, what's the pay stuff by the 15th? So there's my Chase Amazon Visa card and then my HELOC. So just a small $107.54 today, nothing too crazy. So $70 for the Chase Amazon card, like that's what I use for only Amazon purchases and my Whole Foods runs essentially, because I get 5% cash back there. So I use Amazon a fair bit. So that's my card dedicated to that. And then a HELOC, yeah, just HELOC against the house. Right now, I'm just paying like the interest payments. But then if there's any excess, like these last 2 months have been heavy, so there's no excess. But like, yeah, if there's any excess, I just end up putting it towards that. But yeah, I may have to rethink that. I might want to try to prioritize kind of paying it down. So might maybe change up the strategy there, but still thinking on that. But that's the small stuff to transfer over. So I'm just going to get that transferred over right now, actually. So just doing that off screen, unfortunately, again. Just doing that on my phone. And well, actually, if we switch over to Robinhood, we could just actually see this update once it does. So just going to transfer over 7001 to basically my savings account on our Robinhood Banking. And then transfer over the 3753 to my HELOC account. Great. So I should see this update here. Cool. And then now that that's done, we're just going to update the sheet here and with all our latest numbers. So we'll do the positions here. And yeah, like I said, I kind of like keeping this updated manually just because it's kind of nice to see what's been DCA'd down and what changes, right? Because you don't kind of necessarily get that with Snowball because it all happens automatically. So yeah, I'm weird like that, like kind of keeping both updated that way. So let's just get this. So GIX, so here, nice average down to 60.95, and then get the share count here. And by the way, if you like my spreadsheet, this is available in the description below as well too. It's just $5 on Gumroad, so pretty much the price of a coffee. And yeah, this sheet I've kind of built up over the last 5 years or so. Really personalized to my stuff. So your mileage may vary, but you can definitely customize it to your needs. And then XPAY here. So this will be a little bit of an average up just because I'm pretty on the green in it. And share count as well. And then SPMO. This will be probably a pretty big average up just because pretty in the green there as well. And then we'll get the margin total and the margin used. So this has gone up, but basically the difference between what I added with my paycheck and the bills. So just $100 less there. And then if we do the margin used as well, that's all updated. Great. So now with all those investments, that puts me up to, if we add up all my assets together, that puts me up to 421.8K. And also margin used of 190.6K, which gives us a net value right now of 231.2K. So pretty good overall. Definitely hovering over the 400K mark, which is nice. If we check on how stuff is split up between the growth and high yield income side, so we have 203K essentially on the growth side, 48%, and 218.8K or 51% on the high yield income side. So definitely tilting higher towards the high yield income, given that I'm doing the 90%, 10% split now. I used to do 60-40, but for the layoff, like I mentioned, I really wanted to kind of work on getting my salary replaced as quick as possible. So at least my net salary to start, just so that if a layoff happens again, like I'm covered. So as far as my margin health, that kind of keeps me at a 54.82% equity after all that. My margin buffer sitting just under 30% here on the gross. So my gross portfolio value would have to drop a little under 30% to basically hit a margin call at 105.4K. And then as far as my buying power, I'm sitting at 87K essentially. So that's by taking the margin total minus your margin used. And I still have 43.5K of cash available for withdrawal. So pretty healthy amount and pretty healthy buffer, right? I'm not going to overspend this, right? I'm trying to keep this very clear from a margin call and monitoring this every week. As far as the monthly dividends after all that, so we can kind of take this. So 5628.59 minus that number we took earlier. So ended up adding $40.92 to my monthly income today through the investing, right? I'm not always going to be investing the same stuff every week, but like say we times this by 4, right? That's $163 potentially monthly that I keep adding through just the regular paycheck investing. So pretty nice overall, right? And that's gradually how I'm going to replace my salary and kind of get that to just be work optional, right? First, the goal is to like hit my net salary and then kind of keep going from there to hit my gross eventually. And then as far as I can go to really secure things for an early retirement. So with that, so I have obviously a pretty big margin balance, right? None of this is free. Like I'm paying 4.5% interest on that. So that's a $711 monthly interest payment that goes to margin. So anytime that comes in, right, that just gets added to the margin balance. Technically, I don't even have to pay that as long as I kind of keep stuff healthy and the equity wise and stay far from a margin call. Like technically I don't have to pay it back, but as it is, my portfolio is well covered, right? Like I'm paying $711 in margin interest, but through my full paycheck investing and all that, like I'm basically getting a lot of income as well too, right? So I'm making $5,628 a month through carrying that margin, right? So that's a pretty positive spread there, $4,917 a month or 26.37%. So it's basically taking the blended yield minus the interest rate, right? And I kind of get this 30.87% distribution yield by basically taking the monthly income, the yearly income, and dividing that by only the high yield income assets, right? Just to kind of get a good idea of like exactly how much my high yield income assets are yielding. So that's sitting at 30.87%. If we go off the full portfolio value, it's closer to 16.57%. So yeah, pretty great. 67.5K yearly income now, 1,298 per week and 185 per day. So getting this nicer and nicer as far as my passive income here. So that's where the numbers are sitting at. And that's the full process, right? We really got to see this whole chart in practice, right? The paycheck coming in, splitting it 10% growth, 19% high yield income, borrowing against that full asset value to pay my bills. And really only the difference that stays at the end of the month is the difference between the monthly expenses and the dividends, right? So that can range anywhere from 2 to 4K a month, given where my dividends are at right now. So yeah, I got to see this whole paycheck in practice. And yeah, it's a bit sad I didn't get buy that dip today again, but maybe next week I'll just be a bit more flexible on when I buy in case there's like red days. So yesterday would have been a perfect day to buy, but yeah, today I missed that. Still got a little bit of a deal here, but not too much. That said, if you appreciate all the transparency, definitely give a like and subscribe, and I'll catch you in the next video on Sunday. And as usual, if you want to support the channel, best way is to check the description below and get all the links here that we talk about, right? Peace.